on the revenue line, if you will, the new business line, it doesn't look like there's much growth there. But what Lloyds really has become successfully is the sort of simple, boring earnings machine that its takeover of HBOS was supposed to be 9 years ago. It's taken a while till we get here, and it's there. But what's buried in Lloyds' results is much more of an interesting story about the banking industry in the UK today. And I think that's where, is it growing? On the mortgage side, really the big bread and butter of the industry, it looks like peak profitability may have happened. Is the mortgage business still attractive for many banks, or is demand for mortgages decreasing? And those are things we can kind of read into the statements. We look at Lloyds.
HSBC, of course, yesterday said that demand for mortgages was still pretty robust.
Yes, but it's not so clear that that demand is very profitable. And it's starting to look, as we look across the UK banking results, that the real profitability remains in things that are sort of unsecured consumer loans. Credit cards is the most obvious one.
Well, Lloyds has just beefed up its position, of course.
That's right. So we've seen Lloyds beefing up. We've seen banks, the second-tier banks like Virgin Money trying to do more. I think RBS has said they're going to have a different strategy in credit cards now because they've lost market share. So we're seeing the banking structure sort of shift probably from mortgages to other higher-yielding assets.
So would that relieve concerns in your mind then that Lloyds may be almost too dominant now, because it is by far and away the biggest mortgage lender and the biggest current account provider?
And it's advantageous to Lloyds because it seems to have the lowest operating costs. So Lloyds is spreading those costs over a much bigger market and looking very good at that.
You mentioned the costs. Well, Antonio Horta-Osorio, the chief executive, is targeting a cost-income ratio of 45% by 2019. I mean, that would point to a lot more cost-cutting, a lot more branch closures over coming years.
Well, I think there's been a lot of statistics recently about the decline in usage of bank branches, and that's probably not going away. And while we see there's the occasional use of a branch for a special reason, opening an account, new issues, but branch usage is in terminal decline. And so the whole purpose of a branch is going to be rethought. But yes, the big UK banks, the real story going forward is probably as much cost control as it is trying to grow their business.
Now, they've increased the dividend. There's a special dividend as well, but yet they're way, way off the sort of levels of payouts that they were paying pre-crisis. Are they ever going to get back to that?
It should grow. Dividends, assuming our economy continues along positively, this should be a positive story for dividends. I think when we look at Lloyds in particular, Lloyds is very much a mirror of the UK economy. You could say if the UK economy does well, luckily for Lloyds, it's not in places that aren't doing as well. If the UK economy doesn't do very well, Lloyds is a prisoner of the UK economy.
Is that why the Lloyds share price has behaved relatively, its performance has been pretty lacklustre? Is that because people look at it and they're just not that excited about the UK economy?
That's it. I think it's about, Lloyds is a vote of confidence in the UK economy. And it actually, fell quite a bit after the Brexit vote. It came back. Today, the news is relatively positive about the UK economy going forward. But there are doubts.